Russia is blackmailing us. Russia is using energy as a weapon.
It's the biggest threat to European stability in a generation.
Europe needs to be ready.
Causing inflation, unemployment, and political instability across the Eurozone.
And the problem? This. It's getting much, much more expensive.
Russia's invasion of Ukraine sent heating costs soaring around the world and brought an energy crisis to Europe.
And as the cold weather approaches, it's left Europe with a big unanswered question. Will the lights stay on this winter? Now, if you're thinking it's unfair to blame Russia for all of Europe's energy woes, then you're right.
The first culprit was COVID lockdowns. Oil-producing countries couldn't turn on the taps fast enough to meet the post-pandemic surge. Next, the French nuclear energy industry decided to service half of its reactors, causing nuclear energy production to fall 20%. And on top of that, a drought has shrunk rivers across Europe, causing hydroelectric power to fall to 20-year lows.
But the crisis hasn't been bad news for everyone.
Compared to 2021, the profits of major energy companies soared in the first quarter of 2022. There was one other big winner, and that's the Russian federal budget. Spiraling gas prices pushed up Moscow's profits by 34% compared with the same 4 months in 2021. Back in the 70s, it was the price of oil that toppled governments and shook the markets. Fast forward to 2022, and the world is being shaped by the price of gas.
Here at Capital.com, we make all kinds of films and explainers. Click up here if you want to see what affects the price of gold. But first, let's take a look at how Europe gets its hands on cheap natural gas. You know things are serious when European leaders have this to say.
The preemptive reduction of our gas demand is a wise strategy.
Europe's Russian gas addiction has been a project 20 years in the making.
Essentially, Russia has very abundant and cheap to access natural resources, which in Europe we either don't have or, particularly in recent years, have not chosen to exploit.
Before the war, 40% of Europe's natural gas came from Russia, and some countries used more than others.
Germany, Europe's economic powerhouse, imported 49% of its gas from Russia, Hungary 61%.
That was all well and good until Vladimir Putin did this.
Мною принято решение о проведении специальной военной операции.
When Russian tanks rolled into Ukraine, Europe's energy supply became toxic overnight. The EU scrambled to find energy alternatives, and households have been feeling the pinch ever since. The countries that imported the most Russian gas took the biggest financial hit. Germany found themselves with some of the highest heating costs on the planet. After 5 months of negotiating, the EU agreed to reduce their consumption of Russian gas. But the best they could do was a non-binding cut of 15%.
Almost all of the gas that we get from Russia comes by pipeline, and it's much more difficult to replace this with alternative sources of gas. And that's why in gas it's the case that the European Union has not come forward with sanctions, but essentially Russia is sanctioning us and Russia is cutting gas supplies to us in an attempt to choke our economy.
Russia hit back by strangling Europe's gas supply line, Nordstream 1. In 2021, it supplied almost 60 billion cubic meters of gas. By 2022, the Russians cut this to just 12 billion, a drop of 80%.
Natural gas is now one of the hottest commodities on the planet. There's simply not enough of it to go around. And if there's a lot of demand, but not enough supply, that usually means only one thing for the price. If you've paid a bill, made a product, or taken a trip in 2022, you might have noticed that something's changed.
I know people are worried about the rising cost of living.
Everything's much more expensive. when the price of energy goes up, the price of everything else follows. European gas first spiked in the winter of 2021 as energy producers struggled to meet the post-COVID demand. But it was the invasion of Ukraine that caused the record rise in March 2022. As the world hit Russia with waves of sanctions, gas prices have hit peak after peak, rising year on year by 364%.
It's increasingly difficult to see a scenario where natural gas prices in Europe will ever approach levels that they did in the days of lots of Russian gas flowing.
The clamour for gas even moved prices on the other side of the Atlantic.
America sells something called liquified natural gas, basically a gas that can be frozen and then shipped around the world. And as far as Europe's concerned, they can't get enough of it.
So America is a quite significant LNG, liquefied natural gas exporter, for which there is a significantly increased demand in Europe as a result of the Russia crisis. What this means is that domestic American consumers now compete on international markets, and some gas is redirected for export on LNG instead of being consumed domestically.
US gas prices haven't risen as sharply as they have in Europe, but they've still gone up 105%. High energy prices cause another big financial problem, and that's rising inflation.
I think inflation is going to be with us a long time.
Energy makes up 10.9% of Europe's consumer basket. It might not sound much, but when gas prices jumped 400% in a year, it had a direct impact on annual inflation of 4 percentage points. And that sent EU inflation rates to their highest level in history.
High inflation means that rate hikes are more likely, and higher interest rates means that mortgages and loans become more expensive. And higher prices can cause political instability, as impoverished voters are more likely to resent and then vote out their political leaders. EU leaders haven't agreed how to fill the Russian energy gap, but one thing was clear: they were going to have to start burning more coal.
The price of coal kept low during the energy price shocks of 2021 as countries prioritised cleaner natural gas to hit environmental targets. But all of that changed after the February invasion. Countries had no option but to plug their energy shortfalls with coal, and its price went up 170%.
A fossil fuel shortage sounds like the perfect opportunity to kickstart the green revolution. But here's the problem. If the renewable transition was so simple, then it would have happened years ago.
This oil and gas ETF that tracks the price of oil and gas broadly followed the big gains across the energy sector. But this fund, which tracks the price of the renewable sector, went negative in 2021 and never recovered. In fact, it made a yearly loss of 16%.
The EU has not shifted from its climate goals. It's just they take 2, 3, 4, 5 years before they will be realised and before they will significantly reduce gas demand.
So where does that leave Europe this winter? There's one unpalatable option that looks increasingly likely.
The government acted. Rationing descended on the nation. Sugar was the first commodity.
If Russia completely turns off the gas taps, then Europe is going to have to cut back. This projection from the Bruegel think tank shows what could happen if European gas consumption continues at its current rate. It runs out in 2023. But this line shows what could happen if Europe cuts gas consumption by 15%. Put simply, Europe gets to keep some gas in the tank.
If it is the case, which it increasingly looks likely to be, that we are not going to have Russian gas over the winter, the European Union, on average, needs to cut demand by 15%.
The era of cheap Russian gas seems to have come to an end. And regardless of how long Russia's war with Ukraine lasts, European consumers need to reconcile themselves with a new reality. That energy as a commodity, and natural gas in particular, will be more scarce and much, much more valuable.
Thanks for watching. Remember that energy prices will always vary depending on changing market conditions. Don't forget to subscribe to stay alerted to our regular chart analysis videos throughout the week and our other explainers on the big financial topics of the day.